Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Teaching Tech Tuesday. Let's talk about ways to buy the blood, ways to analyze the blood, see if there's any value out there. A somewhat systematic way to stack all these coins up against each other and figure out if there's some interesting setups or not. And as a reminder, when you're buying the dip, at least for me, I'm always looking for specific things: long-held support resistances, horizontals, diagonals, volume profile, channels breaking, parabolic advances breaking, chart patterns. Absolutely. There's like 6 of them, right? Inverted head and shoulders, double bottom, triple bottom, 3 drives, Adam and Eve, cup and handle, inverted cup and handle. There's a handful. It's never changing. It's always the same. They don't have to be perfect. They don't have to be cookie cutter. They have to be somewhat identifiable on a decent time frame, at least for me, to be confident in the trade. We can also look for divergences on things like volume and RSI, which we will do, as well as candles and candlesticks. You always want to see things like a dragonfly, things like a bullish engulfing, some crazy long wick. You'll know it when you see it. It's not going to be some random Tuesday candle that's flat. It's going to be significant volume. Sentiment is extreme one way or the other. Volume is way up and just chaos. And for general trade management, you want to stick to the same sizing. You don't want to go crazy here, whatever your system is. You don't have to make it all back in one trade. You don't have to revenge trade some significant low and be a hero. Confidence drops in times of chaos generally for most people. So sizing probably drops for most people. Maybe you're trading different instruments. Maybe instead of finding those A++ setups, you're settling for some B's and C's on setups. And that should, of course, bring your sizing down. This was just a risk reward idea. We can search for that as we're searching for these setups, but I wouldn't change anything. I wouldn't do anything too crazy outside of what you normally do, despite some things being significantly discounted beyond what you'd normally see in a bull market. Meme coins, for example, are down 80+%. A lot of coins are down 80+% just in the past few months. So maybe you start thinking about the cash bucket a little bit, should you have some of that, and start seeing what you can see on the trading side. But what you don't want to do is you don't want to further yourself in some community member mentality and average losers. You want to cut your flowers, don't want to cut your flowers and water your weeds. So not financial advice, obviously, but not something I'd be doing here unless you have super high conviction on something on page 56, for example. I don't know if dollar cost averaging into that is the best idea here just yet, despite some of these being down significantly. It's just very hard to pick out what or why will move outside of just looking at the technicals. The technicals might look great on something here today, and it just goes nowhere or keeps going down, right? And that can be managed with stop losses, but you certainly have to have realistic expectations what could happen here. Before I go any further, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payer Adventures Inc., PBI, DBA, Kraken. The past few days here, Kraken has introduced a new feature in the Markets tab where you can sort by a taxonomy. You'll have groupings by coin type. You can sort by volume or market cap. And then we can look at what's happened to these over the past X time period: daily, weekly, monthly, 3-month, 1 year. I have it on the monthly here. If you zoom in on the line graph, you can highlight certain sectors and you can see how they've done. So if we look here, we can say, okay, privacy is actually done not so bad. That's mainly Monero and Zcash. That's mainly Monero in that bucket. Relative to infrastructure, which has outperformed to the downside the most relative to everything. So maybe we do some digging in that bucket, and we certainly will do some digging in the meme coin bucket. It was interesting. Yesterday, I had commented that what I was seeing was positive returns on the day for the meme coin sector, whereas everything else was still pushing lower. So always interesting on those little divergences like that, especially something that has been down as much as it has, to maybe take notice and see, is the bottom in for this stuff? A lot of these coins have infinite inflation and emissions, so you're always battling and dealing with that. But from a technical basis, let's take a look at what we can see. And we can look inside of, let's say, the infrastructure bucket, Tau, Render, Jasmy, a few others. And we can look on the graphs again and see what has performed relative to the group, relative to the category, how these have done. We go back to the meme coin sector, take a look at most of these today. Doge up, Bonk up, Melania down, Trump up slightly, Floki up, Pepe up. So even though some of these are up significantly today, if the tide starts to keep churning and turning here, then we could see a tradable low on some of these things that are down 80+% over the past couple months. Now, the difficulty and the challenge here is it's not a full-on bull market for everything. Certainly not on legacy. We're still dealing with the tariff stuff, so you got to be mindful of that. So again, maybe the sizing comes down. Maybe you take fewer trades here. Maybe you just are patient until the end of March into April. BTC for the moment is holding at the yearly pivot. It's holding at the OG pitchfork here. And we did put in a bull div on both RSI and volume. We got a lower low in price, higher low in RSI on lower volume. So we put in a lower low on lower volume than the other day. Not dissimilar to what we saw in August. In September, same type of deal. In this case, relatively equal lows, but RSI was a significantly higher low. And that happens over the course of a week. So is it early to expect anything here? Absolutely. But early bird gets the worm. We're going to take a look. So on the meme side, we'll go to Doge first. On the daily, it is clearly a bear trend. Okay, that's undoubtedly what's going on here. But like I've said with a few of these other charts, we tend to see this parabolic puke to the downside. What I would love to see on many of these charts is what we're already seeing on the daily so far, a green dragonfly candlestick. Typically it's a small body and a long wick. In this case, it's kind of a mix of a bullish engulfing with a dragonfly, with a wick, whatever. This would probably be a better example of a dragonfly that failed. Okay, so these aren't perfect. Here's another one right there. Super long wick, tiny body that did hold, only to fail later on. But we don't really care about ultra long-term time frames here. So you've got candlestick. You do kind of have chart pattern on low time frames because this is a falling wedge variant in that if we find the curve here, there's clearly a parabolic downside move that has occurred that we are trying to find a bottom at some point here. So at some point, there will be an exhaustion in sellers. And from here on out, how do we tackle this? Let's say we're happy with the div, we're happy with the candlestick, we're happy with what this chart pattern signifies. At this point, for stuff like this, I would go to something like the 4-hour and see what we can see. Not much going on yet. This could morph into a head and shoulders eventually. Maybe a better trade would be to wait until we establish a neckline here at 0178. You can see the dragonfly here on the 4-hour chart pretty substantially, has confirmed by several candlesticks above that. So if you were happy with this, what you could do is say, all right, here's my low, 1422, we'll call it. That could be my stop loss. If we turn on the volume level, where's the most obvious place on a low time frame that this could go would be the volume profile level. If we add fibs to this on this yet to be formed bottom pattern, okay, again, inverted head and shoulders, something like that. This would bring us about to 021-ish. We could measure that, make our mind up here on whether or not this is in our risk reward wheelhouse. Maybe we wait, maybe we're satisfied with the daily. But for now, let's keep looking, keeping this in mind. Going down the list here, Pepe, also in the category. Same deal, 4-hour dragonfly, daily, down significantly in a few months here. I think this is still around 78%. Not quite a falling wedge. We've certainly hit the head and shoulders target and then some. If we add a level here, it's probably the 2618, if I had to guess, or lower. That's the 2618. Okay, so we hit the 3618 on this head and shoulders breakdown. We're also pretty far away from the daily Kijun. Now, a lot of this stuff is wishy-washy, right? Do we have a div? Not really. Not really. We have a weak bull div, just continuous here. Anything on the 4 hour? Let's take a look. On the RSI, a little bit of a div, definitely on the 4 hour that's playing out. Definitely some inverted head and shoulder stuff playing out there. Alternatively, unlike Doge, where you could snap take a trade on this at any point, obviously, with the stop loss at lower lows. My preference is always to wait for the cloud. And if we look at Pepe on the 4 hour, Pepe's been below the 4 hour cloud since January. So just giving this a little bit of time, setting an alert somewhere up here. We'll go 655, slightly lower. Setting an alert down there just for the moment to see if there's anything else that looks slightly better. We're not trying to force trades. We're just looking for the worst of the worst, the bottomiest of the bottom, anything like that. WIF, same deal, 4 hour has been mainly bearish for quite some time, since November, really. Again, on the 4 hour, you've got the Dragonfly, you've got a bull div, you've got this miniature inverted head and shoulders forming. We could set an alert around the neckline here as well to make a decision down there. On the daily, this is a pretty significant div that has formed. Pretty deep low with a decent div. Daily Dragonfly, daily bullish engulfing. Not quite a pattern here yet, but broader idea would probably be something like this, inverted head and shoulders into maybe Q2. So here would be another level that I'd be interested in on the daily time frame. Because my guess is if this does pull up, it's going to shoot here, come back down, chop around, and then maybe into Q2. Then we can talk about bullish edge-to-edge trades down the road. And this is how you start to roadmap trades way before they even complete, right? This could all fail. This could keep going to zero. I don't know. But as we get into Q2, we can start to prepare for, okay, the cloud's going to come down, and then this is the edge to edge in Q2. And that's a trade you definitely want to take, or I definitely want to take in size, because you're on a daily time frame and you've got a pretty significantly high hit rate set up. Whereas this stuff here, we're just sort of playing around. It's not really necessarily trades most people want to take, right? This is just, if we're trying to look for some opportunities, this is what we can do. So into Q2, maybe this is 90 cents to 250, 255. And maybe we set an alert here too, as well. But you can see how this could start to materialize. This would be the breakout of the yet to be formed inverted head and shoulders, right? That could lead to an edge-to-edge trade, and then something deep into Q2 would be a pretty large move, right? That would be like a 200% move from 75 cents. It is what it is, right? It's very unlikely at this point in time, but as this stuff potentially bottoms, maybe it's something to watch for. Maybe it's something to watch for. Definitely way too early to call this. Way too early. So that's why I'd focus first on the lower time frame stuff. Anything to 260 or whatever here is just pie in the sky nonsense at this point in time, but it's something to think about. SHIB is another one, very deep move lower here. This is down still 60+%. You had an inverted hammer yesterday. You have a dragonfly today. This confirms tomorrow. You've not quite got a div, so it doesn't look as on sale as I'd like it. This one for me is probably an avoid relative to the others. Maybe you've got some sort of like falling wedge that's tradable here. Possible. We can fib this out. Say some good enough high to good enough low. Again, using the long short tool. We want this to break out. Stop loss would be not exactly low lows, like new lower low local, but just reasonable enough where we're sure that this probably isn't where we want to be. And then measuring this to not the maximum expected, but a reasonable expectation gives you a risk reward of 3. It's something to do. So, you could think about, again, this miniature head and shoulders. Does that play out? Maybe you open the trade here. Maybe you add after we break the 4-hour cloud, because then you have some additional confirmation that this stuff has some energy to move higher. But it's still probably a little bit early on SHIB. And then on bonk, I also saw a similar story where we're getting a pretty significant drawdown here quickly, right? So this would be, at one point it was down over 85%. You had the inverted hammer yesterday, the dragonfly today. You've got a weak bullish divergence here, equal RSI over multiple weeks to the downside. And you also got like stages of down, right? Just like significant stages of down. If we're guessing, this is helpful. It's helpful to see this much down this quickly with momentum sort of petering out. So if we're on board with that, we know this isn't going to be some mega slam dunk idea necessarily, but it's the same story. I would go to the 4-hour. Okay, we've got that miniature head and shoulders to keep in mind. Excellent, great. Maybe we think about some opens at a neckline down there. We are mindful of the cloud that has been perfect since January. It's just been bearish the whole time. Any signal up here, very interesting to take a trade on. I don't think there's necessarily, if we draw this as a wedge, I don't really think so. I don't really think there's anything else here. So of those charts, is there anything that looks amazing? Not really, but there's some ideas to work with on low time frames of stuff that's deeply discounted in the meme sector. If we go to the infrastructure sector real quick and take a look at that, do a quick check on Tau, Render, and HNT. Tau here also had a falling wedge from memory that sort of puked out the bottom, and you got a major, just full-on capitulation. Volume also picked up there, which is good to see. You had patterns failing, you have lows failing. You do not have a bull div here just yet. You did have a bull div on the way down that failed. You currently have a tweezer bottom attempt. You don't really want to see the second low below the first low, similar to here. But it's not perfect, but it's possible that we've put in a significant low for a while. Is there anything on low time frames? 4-hour again. You've got a channel here that we're trying to break out of. So I don't hate it from an ideas perspective. Even if this goes to 50% of the channel, 328, that could be a target. You could target the top of the 4-hour cloud. You could target the bottom of the daily cloud. But there was clearly a pretty orderly decline here going on over the past few weeks. I like this setup a little less, but as long as we can get out of this channel, maybe it's something to think about. The risk here is you just continue zigzagging in this thing, right? Just boop, 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 and just keep going down. Do we have a div on the 4-hour? Kind of. Can I have this equal low RSI with lower lows in price? So I don't hate it. I don't love it. I don't really know where you would necessarily want a stop loss here, right? And it's kind of just super wide. What would you want to target here? Again, middle of the channel, top of the channel, cloud stuff. It's not perfect, kind of messy. Let's take a look at Render, see if there's anything there as well. In the deep value section, Render on the daily, significant wick, getting that classic puke of retail or some fund that was levered up. You do have kind of equal lows here on RSI with lower lows. And the thing with divs is it's subjective. And if it's not obvious, it's probably not a very strong case for a div. But in this case, you definitely have significant lows on not significant lower lows in RSI. So you've got that working for you on the daily. Bearish engulfing candlestick on the daily. Anything on the 4-hour that we can see. Kind of a mess, not really a pattern yet. It's a little early. Maybe something like this in the 4-hour cloud. So I like alerts up here. Let's go 350. But so far I don't like these setups as much as I do the meme coins. HNT up 12% today. Looks to be a similar story. Do we have a div? I'd say yes. You're getting a lower low there on less momentum. Certainly had an volume div. Cloud stuff is just kind of whatever on the daily. Nothing super, super strong. When you get these C clamps, if we extend the TK lines here, those can be good times to take the contra trend trade. I don't think we're quite there yet on HNT and on the 4-hour. Very noisy. I don't really see great setups there. So my preference here for some deep value stuff would be on the meme side, probably Bonk, probably Doge, but you sort of have to personally rank these on your own because that's going to determine sizing, that's going to determine targets, that's going to determine time in trade, confidence in the general setup. Some of this stuff is also Sol beta versus ETH beta. So if Sol starts to pop up, that's also interesting to think about. But as a sector, today and the rest of the week, something interesting to continue to monitor if BTC can stop falling apart. Some of this stuff can start to maybe possibly look better over the course of this month. You know, it's going to take these coins to get above the 4 hour. It's going to take probably the entirety of March to do that. So to summarize, low time frame stuff, I'd bring the sizing down, watch for what you can on candles, chart patterns, and divs. And of course, the option is always just do nothing and wait. That's probably the best option here. Wait for some high time frame A setup versus settling for some B or C setups. That's all I have for this one today. Like, dislike, comment, share, subscribe, and happy trading.